Hey, welcome to your Mortgage Insider Update for this week. It is Fed Day, Wednesday, January 31st, the close of the first month of the year, and Jerome Powell is going to speak in just a few minutes. Just got their Fed statement. Not a lot of insight in their statement other than so far they are not going to lower the short-term interest rate, at least today. So there will be a press conference currently underway. I'm going to actually do a screen share in just a moment for you, show you what the markets are doing as Jerome Powell is coming out and starting to speak. As he fields questions, we'll see the market move around a little bit, but pretty positive energy. Right now, there's about a 50-50 bet on what the Feds will do come in the March meeting. So 50% say that they'll cut the rate for the first time in March. The other 50% say it's going to be later. I'm in the later camp myself. Jerome Powell's speech, which we'll update you on next week, will give us a lot more insight. Let's check out the charts. Okay, we start off today at the 10-year Treasury down below 4% again, 7 basis points. So this started the day out much lower in anticipation of the Fed releasing their meeting notes. The chairman is going to start in just a few minutes in his actual press conference. So far, everything's been pretty steady Eddie, meaning that 10-year Treasury yield has actually dropped, and we can see it drop below the 25-day average. So we've kind of taken a little bit of a hiatus. Things were improving up until the end of December. January's kind of moved up and just kind of slowly moved up, and we're just starting to peel back and really see some light at the end of the tunnel for when the Fed rate cuts could come along. The other big news today, the Treasury has announced their refunding, which means how many Treasury bonds are going to be issued to fund the coming quarter of the U.S. government's activities. Big shocker here, they're going to issue a lot shorter term bonds, so more 2-year bonds than 10-year bonds because of the interest rates, but at the same time, they're not going to need as much refunding as originally thought, and that was one of the concerns around interest rates rising, was that there was going to be an oversupply of the treasuries coming into the marketplace. We'll take a quick look at mortgage-backed securities. The mortgage-backed security prices that the investors pay, as the price increases to the investor, the interest rate to the consumer would drop. We can see that's improving today. Started off kind of right here. It started the day above the 25-day average. So we're looking for positive news from the Fed comments today. And if we can continue the quote-unquote dovish view, that could put us in a good position where they very likely could cut the interest rate for the first time in March. And so right now it's all just a big guess what they're going to do. Stay tuned for next week. So we'll bring you that update on Monday next week with a lot more details from the Fed's announcement today and the press conference. It'll be all over the news. I'm sure you'll see it throughout the week, but we'll give you a succinct breakdown in our newsletter next week. Have a great one.